This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, live across Bloomberg platforms. Yes, indeed, this is Bloomberg Businessweek Daily on a day where, well, we are seeing both bonds and stocks rally. Kind of interesting. This is not what's supposed to happen in a normal trading session, but nonetheless, on this Tuesday, November 25th, that's what's going on. Maybe it's because, as Bloomberg News exclusively reported, that it looks like we know who is the front runner to take over for Fed Chair Jay Powell when his term is up. Yeah,
Bloomberg exclusively reporting that White House National Economic Council Director Kevin Hassett is seen as the frontrunner to be the next Fed chair. And when Bloomberg reported that story, right at noon, we did see yields on the 2-year and the 10-year fall. And also, Carol, we saw the S&P 500 start to climb, and then the Russell 2000 take off and running as well.
Yeah, right now the 2-year note with the yield of 345, 345. 10-year note just below 4%, folks, 3.99. So we're going to keep a track on that. The reason why is Kevin Hassett, right, seen as someone who would really bring the president's approach to interest rate cutting to the Fed, which President Trump has long wanted to control, according to those people in the know in that exclusive Bloomberg report. So it is moving markets.
It's moving markets. What else is moving markets? Google, which is now, quote, fully awake in the global AI race. Also, the question, what does it mean for Nvidia?
Yeah, a lot of questions there. Plus, Ukraine, Russia, U.S., China. We talk national security and cybersecurity. Folks, it's all connected.
Also, Racquel Oden joins us, HSBC U.S. Head of Wealth, Premier, and Private Banking, on the giving shift.
All right, all of that to come, folks, over the next 60 minutes. First up, let's get a check on that rally in both stocks and bonds on this Tuesday. Here's Amy Morris.
All right, thank you, Carol. Just want to let you know, just crossing the Bloomberg terminal, President Trump is considering removing Kash Patel as FBI director in coming months. That's according to MS Now. Reportedly, Trump and his top aides have grown increasingly frustrated by the unflattering headlines that Patel has recently generated. Again, this is just now crossing the Bloomberg terminal that MS Now is reporting President Trump considering removing Patel as FBI director. Now, Nvidia and Google are in the throes of an AI rivalry. You guys were just referring to that. Meta in talks to spend billions on Google's AI chips, showing that Google can rival Nvidia as a leader in AI technology. Google has already agreed to supply up to 1 million chips to Anthropic. Google parent Alphabet now shares are more than 1% higher. Nvidia shares more than 3% lower. And sales at retailers and restaurants increased modestly in September. Resilient consumers moderated their spending after they splurged over the summer. Payroll processor ADP released its weekly measure of hiring. It found that companies cut an average of 13,500 jobs a week in the 4 weeks that ended November 8th. That report may be a sign that hiring is slowing since September. Money markets pricing in about an 80% chance of a Fed rate cut in December after dovish remarks from some policymakers signaling support for the labor market. And of course, we check markets for you all day long at Bloomberg. Green across the screen. The S&P 500 up 0.75%. NASDAQ up 0.4%. The Dow up 1.2%. The 10-year Treasury yield at 3.99% and the 2-year yield at 3.45%. Sources tell Bloomberg National Economic Council Director Kevin Hassett is seen as the front runner to be the next Fed chair. Treasury Secretary Scott Bessent is leading the selection process for the next chair and has said that there's a good chance the president will announce his selection in the next month. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. It's Bloomberg Business Flash. Now back to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec.
All right, always appreciate it. Amy Morris there in for Charlie Pellet. Well, a rally in Alphabet shares really poised to shake up the ranking of the world's most valuable companies amid signs that the search giant is making headway in efforts to rival Nvidia's best-selling AI accelerator. It is prompting investors to reassess the tech landscape and the potential changes in stock market leadership as rave reviews for Alphabet's new Gemini artificial intelligence model and demand for AI chips, Tim, pushes its shares higher. I have been talking about this stock over the last week and a half.
It's like a gainer for you every day.
It is, and hitting new records.
Well, look at this. Just going back to October 10th, so a little over the last month, shares of Alphabet are up 36%, up around 16% since mid-November, hitting another record up more than 70% year to date. So it's outperforming all the other Mag 7 names. For more on what's going on over at Alphabet and Google and the mad dash to spend, that is today's AI race. Bloomberg News U.S. semiconductor reporter Ian King, he joins us from the Bloomberg News Bureau in San Francisco. Okay, so I just want to start with the basic question about what Alphabet has, Ian, that has these companies excited to work with it from a hardware perspective, from a processing perspective, from a chips perspective. What is it?
Well, you have to go back to the fundamentals, and this started about a decade ago at Alphabet. They were one of the earliest to realize, hey, maybe having our own purpose-built chips will actually help us to be more effective. Maybe what Intel, because Intel was dominant at the time, is giving us isn't good enough. So they started with TPUs, really specialist chips to help accelerate search, turned into a successful program after multiple versions of it. And here we are 10 years later, where they have chips to the point where they are usable and other companies actually want to use them in a way that would help with their AI efforts.
So are they a real threat, Ian, to Nvidia?
Well, there are a number of ways to slice and dice this. On the one hand, if you believe what companies including Nvidia, AMD, and all of the hyperscalers are saying, absolutely not, because guess what? Spending is going to the moon. This is the greatest bonanza ever, and there's room for everybody. If that's the case, then this isn't a threat. If you believe at some point the music is going to stop and that innovation is going to slow, then it becomes a scramble. If history is a guide, it becomes a scramble over market share, and therefore any chip that is potentially an alternative to what Nvidia is offering is a threat. Well, you have to decide.
Ian, it looks like the market decided today, at least. I mean, shares of Nvidia down as much as 7% earlier in the session. So investors see this as a threat, fair to say?
Some investors have become aware of that. I mean, this is an esoteric subject, right? If you look at we can only talk about what the companies say and what the basics are. On a basic level, there's nothing to see here. There's no problem. All of the foundational numbers, whether it's CapEx, whether it's revenue, whether it's orders, they're all there. Nothing to see. If you're talking about investor sentiment and investor sentiment changing, this could definitely be something. And as we know, investors like to try and anticipate changes in fundamentals that happen. And this report, which again is unconfirmed, talks about 2027, which is a way off yet.
You know what? I want to go back, though. Ian, is this about whether or not the AI spend and the eventual market size, the ultimate, how big it is? And who gets a piece of that pie? Or is it about Google actually being a rival when it comes to the expertise in chips needed for the AI build, like a real competitor to AI and its top AI chips?
Again, competitor, partner, there's somewhere in between is probably the right answer, and that's a horrible answer. But, look at the numbers, look at the money. Which company is the greatest recipient of Google's CapEx, right? Google, the new chip champion, as we discovered today. Mm-hmm. Who did they give their most money to in terms of CapEx?
Nvidia.
Right. Why would they be doing that if they have everything they need and everything they want? The answer is they don't, right? The answer is it's more complicated. The answer is AI isn't one specific workload. If it was just one specific set of work, then doing what Google does would be the only answer, right? A specific chip for a fixed purpose that's never going anywhere. The answer is it's more complicated than that. Things are changing quickly. You need to back as many horses as you possibly can.
You mentioned a report. The report that we're talking about is the information reporting that Meta Platforms was in discussions to use Google TPUs in its data centers in 2027. Tensor Processing Unit, TPU. Explain exactly what that is.
Okay, a tensor processing unit started life about 10 years ago. It is what's called an accelerator, right? The answer is, instead of using what Intel provides, which is a CPU, central processor unit, which is a generalist chip, does lots of different things. You say, this is a fixed workload that this CPU isn't very good at. Maybe if we made a specific purpose chip that just speeds that particular workload up, and back in those days it was search, then maybe we get a better result from our system as a whole. the use of Nvidia's GPUs, these graphics processor units, is kind of the same idea. And there's lots of different ways to try and get to the same end goal. And that's what Google did early. And then they've sort of morphed that chip to be good at these kind of AI workloads, which is making sense of this massive amount of data and focusing in on creating results and generating pictures or whatever it is that you want to particularly make out of AI. And that's been, they were early to see that and they were early to react to that. So they're enjoying the benefits.
All right, so everybody's a little crazy. Last question here, Ian. It just does feel like, as you said, all of a sudden it's like, wow, look at what Google can do. And it's like the only thing it feels like people can talk about in the market today. I don't know, what is your takeaway? And we often ask this in your expertise of following the chip industry for a long time and understanding development cycles, players who are number one and then they're not number one anymore. So I don't know, is there something to kind of pull away from this?
I think so. I mean, you have to look, if you want to use history as a guide, then why did Intel lose its edge? Why did some of the GPU companies that were bigger than Nvidia lose their edge? And it's the pace of innovation that wins. You make the best chip, you tend to win. You deliver it on time, you deliver it in volume, you tend to win. When you stop doing that, when you don't, run into the future with massive amounts of money and massive amounts of risk, that's when you tend to lose. What's kind of different in this case is that the key buyers of this technology are also trying to run that race. So that makes it, in a way, more exciting and more intense. And that's where Nvidia is right now. And are they slowing down? Absolutely not. Will they continue to win forever? I guess we'll find out.
All right. Good stuff as always. Hey, Ian, thank you so much. Bloomberg News U.S. semiconductor reporter Ian King. Shares of Alphabet, they're up about 1.33% today, up about 70% year to date. Nvidia shares are down almost 4% in today's session. Tim, they are up about 30% year to date. Mag 7 pull back a little bit. They're up about 20% year to date.
Okay, well, let's talk about the big tech trade and where we go from here with our next guest, who sees markets remaining unsettled with core leaders coming under pressure. We've got Stuart Kaiser with us, head of equity trading strategy over at Citi. He joins us here in the Bloomberg Businessweek studio. We're going to talk tech, but just about 2 hours and 11 minutes ago, our Bloomberg News team broke a story about Kevin Hassett of the National Economic Council, White House Economic Council, becoming the key emerging person who could become the next Fed chair. We saw markets react. We saw yields on 2s and 10s move lower. We saw stocks go higher. What was your reaction to the possibility of a Fed chair Hassett?
Look, I think Hassett's been on sort of the short list with Kevin Warsh and maybe Rick Rieder and Waller maybe for a period of time now. So not too surprising that someone out of that core group is sort of being called the favorite. I'd probably tap the brakes on exactly knowing what the outcome here is because President Trump has tended to bounce around back and forth between the various candidates. But I think Warsh, Hassett, Rieder are all considered very credible economists. Very, very deeply understand macro markets.
Is Hassett credible?
Yeah, I think Hassett is, from an economics perspective, on the credible side of things, without a doubt. And if that's the case, then it's not too big an issue, depending on who they settle from that group.
But would Kevin Hassett be a good and independent Fed chair? He is certainly seen as somebody who would bring President Trump's approach to interest rates and cutting specifically to the Fed, which President Trump has long wanted to control, at least according to those folks who we've been talking to in all of our reporting. And so maybe that is why he is coming out as the front runner. So I guess the question is would Kevin Hassett be independent? Would he lower or raise rates based on the Fed's mandate and not on the president's preference?
I mean, you have to assume so. I mean, remember, Trump appointed Powell, and now he doesn't consider Powell to be dovish enough. So, I would say, Supreme Court justices, Fed chairs, I mean, these people are generally pretty reputable people that respect the value and the independence of the organization. And you would hope he's going to make decisions based on the incoming data. Clearly, a president is going to pick a chair that is consistent with their view. So, it wouldn't surprise you that maybe Trump would settle on someone that skews a touch more dovish. But the fact is that whoever the chair is walking into what's basically a split FOMC right now. Mm-hmm. That That's FOMC true. Is also filled with 12 other people who are very reputable economists who are not simply going to be kind of pushed around, and I think who are going to respect the data, respect the dual mandate as well. So it's not as if you're appointing someone that goes in and just makes the decision, right? So again, I think all the three or four of the core candidates I think are pretty well respected economists. They're entering an institution which you would assume they would respect and support. Every every chair is going to have a little bit of a hawkish or a dovish tilt, or maybe a little more focus on inflation versus a little more focus on the growth mandate, and that's fine. I don't think that's particularly offsides or inconsistent with history. So yeah, I mean, I think any of those core will be fine.
Let's talk markets.
Yeah, let's talk markets. I mean, we just talked about with our Ian King about what's going on in terms of Alphabet versus Nvidia, who wins, who not. I mean, Alphabet's been on a tear this year, Stu. I mean, it's up about 70% year to date. You do see the markets remaining unsettled with core leaders under pressure. How do you define unsettled when it comes to markets? What are you looking at? And what does this mean maybe over the next 6 months, 12 months?
Yeah, I think unsettled is kind of what we've seen really for the last month or so, which is four kind of key things have changed in our view that have made the markets a little squishier. The first is that retail has pulled back considerably. And whether you believe or don't believe that retail is driving the market, certainly institutional investors are aware of that shift in supply demand. So again, that's created a little bit of uncertainty. AI, the reaction function of AI has clearly shifted, whether that is Meta or Palantir or Oracle or Nvidia, and you can't ignore that. The third thing is retail. Retail earnings were soft, and the commentary from management was very, very cautious. We just got a pretty weak retail sales number as well. So regardless of all the rest of it, people are saying, wait a second, this U.S. consumer has been the white knight of the economy and, global economy probably for multiple years, and now seems a little bit under pressure. And then last would be the Fed, some uncertainty there. So not all of those uncertainties.
It's a lot.
Yeah, and like in and of themselves, each one of these might not be, an issue, but you put them all together and they've created some uncertainty. You're also in a tricky time of the calendar. You have portfolio managers who've had a really tough year.
Yeah.
If you're up year to date, you're not going to play hero ball between now and the end of the year as well. So I think you've made people a little more cautious for a lot of reasons. So I think right now it's hard to have a really, really strong tactical view. If we had to pick one, we're going to pick higher into year end. We do think ultimately you get a rate cut and the seasonality pushes you there, but the risk reward around that is not nearly what it was a couple months ago.
What changes your view between now and the year end, where you'd say, actually, we're not thinking higher till year end now?
Yeah, the data, probably December 16th would probably be the single most important date on the calendar, which is going to be, dual payrolls reports. Our view is the unemployment rate is, if you had to pick one thing, is the single most important thing for the market. So that's going to be a very important day. Before we get there, Black Friday, Cyber Monday will be important, but the single biggest day is December 16th.
And to remind everybody, that comes 6 days after we hear from Fed Chair Jay Powell, and the entire Federal Reserve, the FOMC, is going at this without the typical data that it has ahead of a Fed decision.
Yeah, 100%. I mean, and you're also getting the inflation print on the 18th. So you could imagine a situation where the Fed cuts 25 basis points, tells you they're data dependent in 2026, and then boom, you get hit with really weak labor markets the next week, and vice versa. So I'm not saying either or is going to happen, but our view at this point is the logic behind the rate decision is as important as whether they cut or not, right? If they don't cut and it's because the labor market looks solid and the beige book comes in very positive, that's good. If they do cut and the market's like, wait, you all look like you might be behind the curve a little bit because the next week we get weak labor markets, less good. So really, we are data dependent, probably a meeting before we expected to be. But if you're asking what could change my view into year end to become more bearish, should be we get some weak holiday spending data, and then that labor market report is unfriendly to the markets.
Yeah, that would certainly do it. And because you'd be looking at both sides of the mandate right there for the Fed. Hey, Stu, thank you so much. Really appreciate it. Yeah. Stu Kaiser, head of equity trading strategy over at Citi. All right, from markets and the U.S. economy to geopolitics, where we are when it comes to peace between Russia and Ukraine, and when it comes to the frenemy relationship between the two largest economies. Yes, we are talking U.S. and China. All of that when Bloomberg Businessweek Daily continues on this Tuesday. This is Bloomberg.
It's 2:21 on Wall Street. I'm Amy Morris. Stocks pushed higher as traders contended with signs of competition heating up in the artificial intelligence arena. We check markets for you all day long at Bloomberg. The S&P 500 up 0.6%. NASDAQ up 0.2%. The Dow up 1.2%. The 10-year Treasury yield at 3.99, almost 4%. And the 2-year yield at 3.45%. Google releasing a new IA software and striking deals, reassuring investors it will not easily easily lose to ChatGPT creator OpenAI and other rivals, including Nvidia. Nvidia earlier fell as much as 6%, with concerns about that competition, erasing more than $240 million in market value. Alphabet shares now more than 1% higher, and Nvidia shares now more than 4% lower. Best Buy reported better than expected results for its third quarter, boosting its year forecast. Guidance for the fourth quarter is underwhelming, but Best Buy shares right now about 5% higher, and Dick's Sporting Goods raised its outlook again, but investors are still focused on the costs of trying to turn around the Foot Locker sneaker chain that it acquired. Dick's Sporting Goods shares nearly 2.5% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec.
All right, got it. Amy, thank you so much. Amy Morris there. And for Charlie Pellet. Well, the White House signaled optimism around efforts to negotiate a peace deal, between Ukraine and Russia, while warning that additional negotiations to address remaining sticking points would be necessary, despite reports earlier suggesting, Tim, a deal was afoot.
With an update on this and more, back with us is Jennifer Welch, geoeconomics analyst at Bloomberg Economics. She joins us from the Bloomberg Washington, D.C. bureau. Jenny, Bloomberg Economics out with a new report. It notes that the U.S.-Ukraine policy whiplash is benefiting Moscow. What do we know?
So it's been quite the roller coaster over the last few days. What emerged last week was a plan that seemed to be negotiated between the U.S. and Russia, largely favorable to Moscow in terms of, for example, capping Ukraine's military, ensuring that it would never be a part of NATO, in return for pretty ambiguous security guarantees. Since then, there's been a scramble by Ukraine and its European partners to engage Washington and try and alter those terms. It now looks like at least 9 of the points from that original 28-point peace plan have been adjusted or removed, including some of the ones that Ukraine felt crossed its red lines. And where things stand is finalizing those terms and then pitching them back to Moscow. But our assessment is that Russia is unlikely to receive in a positive way those altered terms based on how things have gone earlier this year in prior rounds of negotiations.
Wait, so you know what I keep thinking? Who's calling the shots of a possible truce? Is it U.S.? Is it Europe? Is it Ukraine? Or is it President Putin of Russia? Or maybe a little bit of all of them?
Or who even in Washington is involved in this? It seemed last week when this plan first emerged that some members of the President Trump's own administration weren't even entirely sure where this peace plan came from and whether it had been fully coordinated and agreed to by the U.S. side. But then it quickly moved from that to the U.S. setting an ultimatum on Ukraine to agree to it, and now we're renegotiating the terms of it. So it's been a lot of twists and turns here, but this isn't an entirely new story. This is something we've seen earlier this year. If you think back to August when President Trump met with President Putin and then immediately rushed into a summit with Ukraine and European allies, this feels very much like a familiar pattern and one I think is likely to produce the same outcome, which is no peace plan.
Well, okay, so on that, European allies, sort of another group here that we need to focus on. What do they want?
I think European allies are primarily concerned about, first, making sure that this deal isn't so heavily weighted in Moscow's favor that, for example, it doesn't end up preserving peace for the long haul. That, for example, it leaves Ukraine in a weakened position that could allow Moscow to just reconstitute its forces and re-attack. That not only has implications for Ukraine's security, but ultimately for Europe's. So that's going to be a major area of concern. Second major area of concern is one of the elements of that original peace plan was around the frozen Russian assets and how they would be leveraged, and in particular, how they might be leveraged to essentially pay the U.S. back for security commitments to Ukraine. That's something that Europeans have a stake in as well, and they would want to have a say in how those frozen assets are used, particularly as they're debating internally whether or not to use them to support Ukraine in the short to near term.
Hey, Jenny, I want to move on to U.S. and China, but one last question. Is there still a feeling here in the United States and obviously elsewhere in Europe, I think Europe it's a safe yes, but here in the U.S., that if this is a much more favorable agreement to President Putin, that he may, in another few years, create another war and go after another land grab? I just wonder how much of that fear is still out there.
I think that's certainly a concern among foreign policy analysts, especially having watched Putin play this playbook before. We saw with Crimea back in 2014. He played out the peace process. He drew out negotiations and pretended to be genuinely interested in peace. And then he essentially snagged and pocketed the results of that peace process, reconstituted his forces, and launched a full-scale assault on Ukraine just years later. And I think certainly leaders in Europe and Ukraine, but also in the United States, many are concerned about the possibility of that happening again.
So in terms of just thinking about possible endings for this, as we do get close to the 4th year of this conflict, what would an end look like that Russia would be okay with and Ukraine and Europe would be okay with?
It's hard to see at this point a potential compromise position because Moscow seems to be betting on more battlefield gains and essentially seeing that time is on its side. It really doesn't have an incentive to negotiate for peace because it thinks it can just continue to win territory. The West's support for Ukraine will continue to dip. Ukraine will continue to have some of the internal issues we're seeing, like with corruption scandals and losing political domestic unity. And it will just have to bide its time and continue to push for the offensive. I think what could change Moscow's calculus is stricter Western sanctions that bring some of its economic troubles more to the forefront. That might press it into a position where it realizes it's not a war that it can continue to afford.
And just to clarify, we're in the 4th year. It'll be 4 full years of this war in February.
Yeah, I mean, it's just even hard to believe that that's where we are. Hey, I want to just quickly, one question to you on U.S.-China. President Trump, we know, held back-to-back calls with the leaders of China and Japan. We've seen escalating tensions over Taiwan threatening to derail his weeks-old trade truce with Beijing. It always feels so fragile. That relationship, U.S. and China, always complicated. Will a U.S.-China truce last?
I think my prediction is for the short to near term. Again, with President Trump, you kind of always have to have an asterisk because you don't really know exactly what he's going to do. But my prediction is at the moment, yes, I think it will last. I think the Trump administration is very focused on maintaining it. I think the calls that we saw yesterday were more about an effort to manage this China-Japan feud and avoid drawing the United States into it and avoid it upsetting that existing truce. I think the questions that we have for the longer durability of that plan are things that are, for example, outside the scope of that truce. Actions by Congress that Beijing could see as violating the spirit, if not the letter of the truce. Actions that the U.S. might take as sort of its normal export control policy updates that might violate it. So there are definitely a lot of potential speed bumps in the future for this truce. But at the moment, Washington seems very focused on maintaining it and keeping it in place.
All right, going to leave it there. Hey, Jen, thank you so much. Jenny Welch, she's Chief Geoeconomics Analyst at Bloomberg Economics. All right, geopolitics, relationships among allies and friends, between enemies. I mean, this makes me think about cybersecurity and national security issues.
Well, a recent Bloomberg opinion piece by the editors wrote America's enemies are growing bolder and more sophisticated in cyberspace. Carol, to fend them off, the government must stop unilaterally disarming.
All right, so we want to get into the state of readiness when it comes to cyber threats. Keep in mind that we've had 2 recent reports underscoring some of the danger that's out there. Mid-October, Seattle-based cybersecurity firm F5 acknowledged a catastrophic breach of its systems, which may have allowed Chinese hackers to penetrate networks used by federal agencies and Fortune 500 companies. There's, of course, other stuff that has happened as well. Back with us is Jennifer Ewbank. She's founder of Andaman Strategic Advisors. She advises companies and clients on cyber resilience, digital transformation, geopolitical risk. She is a former CIA deputy for digital innovation. She joins us from Virginia. Jennifer, good to have you back with us. When it comes to the most urgent national security and tech issues, and I want to go with China right now, is it threats from China? Is it threats from Russia? I mean, like, what is it in terms of the United States?
Great to be back with you, Carol and Tim. Thank you. If we're talking about cyberspace, it's really about the People's Republic of China. Of course, Russia remains a very active actor in cyberspace. We can see that in Ukraine. We can see that regionally and occasionally here in the U.S. But in terms of sophistication, scale, and ambition, it's really all about China right now.
How sophisticated has China gotten?
Oh, incredibly so. You may have seen a report came out recently from Anthropic, where they documented the first essentially AI-powered cyber campaign from inception to exfiltrating data that was almost exclusively conducted by AI agents. The agents would simply come back occasionally and ask the operator, is this what you want? Or would you like this instead? Or do you like that? And 80-90% was automated. And that came out of China and state-sponsored actors.
I don't love this, Carol.
Okay.
No, I wouldn't.
It's not like the people who are doing the infiltrating have to be only so smart, right? And you only have to outsmart them. Now we have to outsmart the machines.
God, that's terrifying.
Yeah, don't love this.
Yeah, how do we keep ahead of... Wait, go ahead.
Oh, no, I'm just going to say it really does signal a major shift, right? We all knew this was coming, at least those of us in cyber realm knew that this was coming. When you see the confluence of AI and cyber, you knew we'd be facing this. And so really we have to be in a position where machines could start fighting and defending against machines. There's a certain risk in that as well, because machines are not humans. They don't exercise our judgment. All sorts of things can maybe go awry. But as a start, we're just going to have to be bringing more AI into our cyber defenses if we are going to actually harden our perimeters and protect our data.
Yeah, go ahead.
No, please.
Well, I was just thinking about President Trump signing that executive order yesterday, Genesis mission. It's a federal effort to boost innovation using AI. And so it's all about promoting AI technology and its adoption. As more AI is incorporated into the U.S. government, all governments, I mean, does that just increase the cyber risks, or does AI also help us fight these risks?
It's both. It's like any new technology. It's both shield and sword. It's both. And yesterday's announcement is actually pretty exciting in a way, because it represents a moment where the administration is trying to, let's say, bet big on AI's ability to help us discover new breakthroughs in all sorts of various scientific fields, not specifically about cybersecurity, but about quantum and biotech and space and lots of other things. And so one of the issues, and I'll tie that back to cybersecurity, one of the things that people are going to be watching with that effort is how do we protect the data? Because this is going to be a tremendously attractive target for adversaries. If you're talking about bringing together our national labs, the supercomputing capabilities, sensitive federal data sets on science, and then America's leading technology companies, that's going to be right in the crosshairs of our adversaries' targeting.
So then what is the right way, just very briefly, to protect this data?
Oh, well, I think, they're going to have to be locking down in every possible way they can. And kind of the chapter and verse on that will have to be worked out, because this is all still in formation at the moment. And I think people are going to be watching to see how the Department of Energy implements this intention, this order, if you will. So a lot to be determined right now.
I'm just going to unplug everything and throw out my phone. How's that work? Is that okay? Does that enough, or that's not enough?
Okay, one pro tip, put multi-factor authentication on any account that will allow it, and that will stop virtually all nefarious activity on.
And you need your phone for that, Carol. Sorry to tell you.
I do.
Don't throw it away.
Jennifer Ewbank, always good to catch up, founder of Andaman Strategic Advisors, former CIA Deputy for Digital Innovation. Hey, when we come back, the giving shift, how affluent women are defining wealth and philanthropy close to home. That one, Bloomberg Businessweek Daily continues.
It's 2:40 on Wall Street. I'm Amy Morris. U.S. regulators moved to relax capital requirements that lenders said limit their ability to act as intermediaries in the Treasuries market during times of stress. These revisions would reduce holding companies' capital requirement under the enhanced supplementary leverage ratio to a range that's substantially equivalent to the plan from June. Sources tell Bloomberg the National Economic Council Director Kevin Hassett is seen as the frontrunner to be the next Fed chair. Treasury Secretary Scott Bessent is leading the selection process for the next Fed chair and says there's a good chance President Trump will announce his choice within the next month. The tech sector trimmed earlier steep losses from earlier this session. Traders contending with the AI chip rivalry between Nvidia and Alphabet, and we check markets for you all day long here at Bloomberg. S&P 500 up 0.5%. NASDAQ little changed on the upside. The Dow is up 1.2%. The 10-year Treasury yield 3.9999%, right at 4%. And the 2-year Treasury yield at 3.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. It's Bloomberg Business Flash. Now back to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec.
All right, Amy, thank you so much. Well, alternative asset managers have been snapping up insurers in recent years, gaining access to a stable source of long-term capital to fuel their investments. Apollo, we know, pioneered the model with its insurance arm, Athene, investing in financial products, Tim, created by its asset management division. Recently, though, the close ties between private equity and insurers have drawn scrutiny, as the latter had traditionally put their money in the most liquid parts of the market, such as high-grade bonds and stocks. The recent blow-ups of auto parts firm First Brands Group and subprime auto lender Tricolor Holdings have exacerbated fears about credit losses across the financial industry. Yeah, this is a worry, and it really fits into, I feel like, the broader conversation we've been having about private markets, private credit. It's a lot going on. So we just wanted to throw that out because that's a story that is certainly on the Bloomberg today. And we want to talk about it a little bit with our next guest. Let's get to our weekly segment, Women, Money, and Power. We explore all the economic implications of how women are poised to control more money than ever before as the biggest beneficiaries of the great wealth transfer. So with more on all of that, we welcome Racquel Oden. She is head of international wealth and private banking at HSBC, joining us in studio. And we wanted to do that because part of, wealth, and when we talk to wealth managers, private bankers, is that we know investors, clients, consumers of yours, they're interested in certainly the private markets, and it's a big part sometimes of their portfolios, or they want it to be a part of their portfolios. Yeah. And we're going to talk about your report on the giving shift in just a moment. The credit concerns or private credit markets, private market worries, what are you hearing from your clients about that? What is the discussion you guys are all having with your team?
Yeah, so I think, as you said, this is one, it starts with diversification, right? So it's not the primary part of the portfolio, but there's clearly a need and there's an interest for a sleeve of your portfolio to be part of this.
How much is usually in a client's portfolio that you work with? And I know everybody does it a little bit different.
I was going to say, it depends.
But what's the range typically?
I think on this, you're talking like 10%, 5% of the portfolio. These are things you're going to look at. And by the way, this is if it makes sense for the client, if they have interest in it. I think as you think about the private equity markets, you think about AI, you think about, will the Fed make cuts? These are all the interesting questions we get from our clients today, specifically of how do I respond to that and make sure that I'm still focused on my long-term goals with all of these different aspects happening, as well as the regulation with all of this too. What is this going to look like, and how do we manage these private equity markets? That's something that is certainly also being looked at.
But in that 10% slice, it's not 10% private credit. It's There's some venture capital in there. There's some private equity in there. I mean, some people may ask for exposure to crypto in that alternative. So I don't know, is that kind of how you see it? Like a very small portion of it, the typical portfolio would be private credit?
Private credit, but at the same time, exposure to crypto is something you have to decide if that's specific to you. I can't say that's something that big banks are getting behind. But again, it comes down to the individual, what they're looking for, and how do you balance the risks and all this that we're talking about, and also making sure that this isn't becoming your primary way of attaining retirement is key to that.
Yeah, because it's just been interesting. We are trying and talking to smart voices like yourself and just trying to get an idea of what people are hearing, thinking, saying, because we know that Jamie Dimon made the comment about more cockroaches out there. We've been looking at, there have been some trouble, certainly in some of the subprime auto lending area. Yes. And we had the Apollo CEO, Mark Rowan, speaking as part of a presentation on the firm's retirement services business. And he rejected the idea that private assets introduce risk to retirement and insurance portfolios. He said, quote, people have really just lost their minds, and the headlines get more and more hysterical and have almost nothing to do with the substance. Having said that, one last question, and then we want to get to your report.
Again, the big key thing you said there is your risk tolerance, right? So it is a basic factor of how much risk are you willing to take on. And I think to the point of what you're hearing there is, whether it's crypto, and you've heard from other industry leaders, like I said, this should not be your retirement plan, right? Yeah. This is where you have the ability to take risk, but it's not needed for your livelihood or everyday living.
Well, so your client base, like I'm assuming, these are folks with high net wealth. And I'm just wondering, are they clamoring to do more and more in private markets? Do they want to see this open up more? Or are they pretty comfortable? Or they're like, you know what? We see the concerns. We're a little concerned too.
All of the above.
Okay,
right? Check. No, genuinely all of the above. But still, there should be some level of openness to the exposure to it. And I think that's the part you are seeing from this client base.
Now, I always think about this, and you and Tim and I talk about it. Men and women are different. And I always think about risk tolerance. But talk to us, you've got a report out, The Giving Shift, Global Living, Local Giving, how affluent women are defining wealth and philanthropy close to home. Yeah. Talk to us a little bit about this report. And I am always curious how it differs, maybe perhaps from what men might do.
Yeah, so I think it's between men, women, and the generations, which I think was great about the report. Yeah. And so we surveyed over 1,000 affluent clients, and really from the standpoint of what matters to them most. And I think there's 3 key factors that came out of this. The first one being 60% of affluent women said giving financially is extremely important or very important to them. So if you think about that as a factor in itself, so you just talked about the transfer of wealth going to women.
Right.
They're saying it's a top priority for them to give financial wealth, which I think is a very different factor between men and women. That's the first one.
What does that mean?
So what they're basically saying is, as I create my wealth, I want to make sure that I can give financially to giving. Charity, philanthropy is 60% of a priority to me. So it's a very high number. So it wasn't like I want more accumulation of wealth. I want to make sure that I have the ability to give financially or give away my wealth in some shape, form, or fashion. And so what you've seen from the big billionaires that are out there, historically it has been they want to give a big check with a big name and put their name on a building or, into the theater. What's different here is what you're seeing in women and their giving. It really is they want to give close to home. They want to give to local charities or local things that they can see immediate impact, less about having their name on a building.
How much about the giving is giving while living versus promising assets or promising money in a will?
Question. It's both, right? So giving while living. So as they're accumulating their wealth, they're focused on how can I give while I'm living, but more importantly, how do I make sure my wealth lives on? So their passing on is just as important to them critically. Now, giving while living tells you at different stages of where they are, whether you're a Gen Z versus obviously baby boomer, there's a big difference in where your psyche is and what you're focused on. What's important about that, though, is we also have to figure out the confidence of women on their investing and their wealth.
Right.
Knowing that if it's a priority for them to give philanthropically, they want to make sure they're able to accumulate wealth. What we did see in the report that was very dramatically different is when you take a look at women and investing in their confidence, because we do know that's a huge factor in a lot of this. When it came to Gen Zs, 61% confidence. If you look at baby boomers, they're closer to the 40%. There's a very dramatic difference between the generations of their confidence in wealth. And then we did it based on race, and we saw a dramatic difference there as well. African American women came in at 69%, feeling confident that they would be able to attain their wealth. Hispanic women were 60%, white women were 47%.
Interesting.
Very interesting. So the attaining of wealth or the confidence that they can attain their wealth looked very different for African American and Hispanic women. But generationally, Gen Zs have the most confidence in the standpoint that they feel good about their wealth and what they can do in markets.
I love that people are continuing to do research and find out more and more and understanding, especially because there's more wealth coming into the hands of women. Racquel Oden, she is head of international wealth and private banking at HSBC. Thank you so much. Thank you for also talking about the news of the day.
Some headlines crossing the Bloomberg terminal. U.S. presidential envoy Steve Witkoff advised Russia on how to pitch Ukraine plan to Trump. Check out the full write-up by Bloomberg News on the Bloomberg terminal. Once again, Witkoff advised Russia on how to pitch Ukraine plan to President Trump. Coming up next on Bloomberg Businessweek Daily, stocks on the move. Denitsa Tsekova is here with stocks that are moving today. That's next on Bloomberg Businessweek Daily.
You're listening to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, you are listening and watching Bloomberg Businessweek Daily. Carol Massar, Tim Stenovec, live here at Bloomberg headquarters. Do want to mention a Bloomberg exclusive just crossing the Bloomberg terminal. U.S. presidential envoy Steve Witkoff, fresh from the triumph of the Gaza peace deal, held a phone call last month with a senior Kremlin official to suggest they work together on a similar plan for Ukraine and that Vladimir Putin should raise it with Donald Trump.
In an October 14th phone call that lasted a little over 5 minutes, Witkoff advised Yuri Ushakov, president's top foreign policy aide, on how the Russian leader should broach the issue with Trump. His guidance included suggestions on setting up a Trump-Putin call before Volodymyr Zelensky's White House visit later that week and using the Gaza agreement as a way in.
This is a quote, we put a 20-point Trump plan together that was 20 points for peace, and I'm thinking maybe we do the same thing with you. Witkoff telling Ushakov, this is according to a recording of the conversation reviewed and transcribed by Bloomberg.
A White House spokesperson, Anna Kelly, acknowledged receipt of a request for comment and didn't immediately respond. Kremlin spokesman Dmitry Peskov didn't immediately respond to comment. Once again, Witkoff advised Russia on how to pitch Ukraine plan to Trump.
And I just want to add one more paragraph from this story. We are reading directly. It's on the Bloomberg and at Bloomberg.com. The conversation for the first time offers direct insight into Witkoff's recent tactics for negotiating with Russia and what appears to be the genesis of the 28-point peace proposal that emerged earlier this month, which the U.S. had pushed Ukraine to accept as the basis of a deal.
We should note, too, that President Trump earlier on social media said that he has directed U.S. envoy Steve Witkoff to meet with Russian President Putin in Moscow as part of efforts to finalize a peace plan and end the war in Ukraine. The Secretary of the Army, Dan Driscoll, will be meeting with the Ukrainians. The president says, quote, I look forward to hopefully meeting with President Zelensky and President Putin soon, but only when the deal to end this war is final or in its final stages.
All right. As we said, this story, it is on the Bloomberg and at Bloomberg.com. Again, U.S. Presidential Steve Witkoff advising Russia on how to pitch Ukraine plan to President Trump. I'm Carol Massar, along with Tim Stenovec. Let's get to some stocks on the move. And with us to do that is Bloomberg News cross-asset reporter Denitsa Tsekova joining us. We're all talking about Nvidia and Google today. Both of these stocks are moving.
Yeah, the big trade has been Nvidia down more than 4%. It fell as much as 7%, and Alphabet is up more than 1%. The ticker, of course, is GOOGL. Of course, it's coming off Nvidia and Google AI chip race intensifying. This has been something people have been warning for a long time, but it seems that the latest thrust was as Meta reportedly is in talks to spend billions on Google's AI. Alphabet already has an agreement to supply up to 1 million chips to Anthropic. So it seems like those TPO chips, which actually Alphabet developed more than 10 years ago, are now gaining momentum outside of Google as a way to train and run complex AI models. And it seems like we're seeing quite the reaction in markets. Google is approaching $4 trillion market valuation and is up 70% this year. Nvidia, which has been in the center of all the AI bubble jitters in the last few weeks, is up only 30% this year. So this agreement would maybe establish TPU as an alternative to Nvidia chips. And the whole industry is obviously looking as the focus was only on Nvidia as the main name that was giving chips to Meta, to OpenAI. And now the competition is emerging from a little known corner of the market, I would say.
Yeah, it's pretty remarkable to see how Alphabet has performed this year. We had a great conversation with Ian King, our own Chip King, a little earlier in our broadcast. Everybody should check it out on the Bloomberg terminal and on our podcast feed.
Yeah, I mean, just this story and just kind of how things can change, the twists and turns. Of course, Nvidia, NVDA is the ticker, and Alphabet is GOOGL. Some of the retailers, really some big moves. Let's go to Abercrombie & Fitch. This stock is just soaring today.
Yeah, it's incredible. Thinking about stories changing, Abercrombie had dropped 56% through Monday, but just today, shares are up 35%. It comes on fundamentals. This is not purely a meme move. The retailer raised the low end of its 2026 net sales and earning per share guidance. Investors are clearly really excited about it, buying the dip. The ticker, of course, is ANF. The big winner, it's Hollister brand. This is what everyone have been watching. Sales at Hollister jumped 16%. Strong back-to-school demand. This is what they're saying. Net sales will grow about 6 to 7% this year. The move shows that the trend retailer is working. They had like a big moment last year, and then it seems like it was struggling this year. But the new chief executive officer has been trying to draw older customers to Abercrombie brand, while Hollister is going for the younger consumers, and that's been working. They've been attracting both type of consumers, and it's really paying off today. What a jump.
Yeah, and we should just mention real quickly that Kohl's is also moving in a big way. Ticker is KSS, and it's up about 40%. Just got about 10 seconds. What do we need to know real quickly?
Yeah, again, this is again about fundamentals. The retailer boosted its annual forecast after third quarter results top expectation, but same story as Abercrombie. Really impressive rally. Up more than 50% this year. Yeah. Higher than Nvidia.
Pretty wild, pretty wild. All right, folks, check out our Stock Movers podcast. 5-minute episodes of the biggest winners and losers. You can find it on Apple, Spotify, or anywhere you get your podcasts.
Hey, coming up next, we got a great program on over the next 2 hours on Bloomberg Businessweek Daily. If you're watching on YouTube or joining us on radio, we're talking behavioral finance. We're talking about the Google AI story, and then Fed Chair Kevin Hassett. That's next on Bloomberg Businessweek Daily.